Hello everyone, this is Argong Win and welcome back to the channel. Happy New Year! It is now officially 2026 and I look forward to learn more about all the things that's happening in the market and also to share with you guys what I've learned and what I will continue to do investing wise. So let's get started. Today, I am looking forward to sharing my investing thesis for the following three companies in my portfolio, which are Amazon, Duolingo, and Google. So let's get started first with Amazon. This company has multiple subsidiaries, including Amazon Web Services, cloud computing, Zoox, a self-driving car division, Cooper Systems, a satellite internet provider, and also the Amazon Lab 126. You can look that up on Google, but essentially it is a computer hardware R&D provider. There are other subsidiaries including Ring, Twitch, IMDb, and the Whole Foods Market. The acquisition of Whole Foods Market in August of 2017 for $13.4 billion has increased its market share and presence as a physical retailer. Amazon also distributes a lot of downloadable and streamable content through its Amazon Prime Video, MGM Plus, Amazon Music, Twitch, Audible, and Echo services. It is not a surprise that almost everybody knows what Amazon is. It is because it has probably the biggest moat in the online shopping business. Whenever you go to buy something online, you think of Amazon. Whenever you think you need something and you don't want to go to the store, you go to Amazon. This is like common general knowledge at this point. Amazon Prime is a membership-based revenue source for Amazon. It just hit 200 million global members and nearing 200 million in the US only by 2025. And as 2025 was already wrapped, it has been over 240 million people that has already subscribed to Amazon Prime. It is a steady, slow growth post-pandemic compared to the massive surges in 2020 and 2021. There are a lot of benefits when it comes to Amazon Prime. That is why it has incentivized a lot of people to sign up. It includes free shipping, Prime Video, and also a lot of other offerings. This has grown a lot despite potential market saturation or even competition, which is most likely non-existent because Amazon has had such a monopoly on online shopping compared to all other platforms. The global reach of Amazon has reached 240 million, as I have said. And this is the entire world. And it has probably reached around 200 million in the US only, with about 74% of shoppers becoming members. After the pandemic, it has been growing more slowly, but it has remained positive and reaching new highs despite the saturation. There are a lot of reasons why it's growing steadily. There's the benefits. There's also the digital content, which you can see. There's video, music, even gaming. And there's also a lot of ads on Amazon Prime. This creates new revenue streams with projections for significant ad revenue growth in 2025. The value proposition remains on delivering superior value through faster delivery and diverse digital perks to maintain dominance over the market. One of the core businesses of Amazon is the Amazon Web Services, or AWS for short. This is Amazon's cloud service, and essentially what everybody says is Amazon controls half of the internet. In light of what just recently happened during around September or October of 2025, there was a blackout on almost every website. This is due to the crash of AWS. On the surface, you can say that AWS is unreliable and many people will choose other cloud services. But this also means that a lot of existing companies and websites use AWS as the cloud service for their website, which means over half of the internet is reliant on the services of Amazon. AWS continues to be a primary driver of profitability for Amazon because the growth rate has accelerated to around 20.2% in the third quarter of 2025. And this has been the fastest pace since the end of 2022. And this is largely attributed to strong demand for artificial intelligence and core infrastructure services. The company is aggressively expanding data center capabilities to meet demand. The current annualized run rate for AWS revenue is approximately $132 billion, and it is backed by a substantial order backlog of around $200 billion in committed customer contracts. This has led analysts to project continued strong performance, and with forecasts suggesting that AWS revenue could reach over $128 billion in 2025, driven by ongoing AI investments and the expanding enterprise adoption. AWS has accelerated significantly thanks to the AI boom, and its leadership is reinforcing and generating substantial future revenue streams, even though competitors vie for market share. Let's look at the fundamentals of Amazon. So Amazon has a significant recovery in its earnings per share, or the EPS, over the past 2 years. And especially this year, it has reached almost $5.53. After experiencing a loss around the 2022 fiscal year, Amazon has still demonstrated a strong financial rebound. The EPS nearly tripled from $2.90 in 2023 to $5.53 in 2024, reflecting a lot of operational efficiency, growth in high margin segments, and also effective cost management. And about the income of Amazon, it has reported a total revenue of $638 billion for the 2024 fiscal year. And we're still waiting for the 2025. But based on this growth, it has been projected as something even higher, which is a very good sign. So this company has been growing approximately 11% year to year. And since it has outpaced its industry average, it has been a surge of analysts and investors that keep investing in this company. The analyst has a strong consensus of either buy or strong buy. And this is because a lot of people are looking through the company fundamentals, looking through the projections, and it's all great. Only a small percentage of analysts recommend a hold, and none of them recommend selling. The average 12-month price target is approximately $295 to $296. This also means that there is a huge potential upside to the current price of $232 or around that. The bullish sentiment is largely driven by strong performance and also future growth prospects of AWS. Also, the integration of AI across its services. And all in all, the analysts are very optimistic about the company's long-term potential. And it could cite double-digit revenue growth and expand operating margins during the next 2026 year. Looking at the history of the share price of Amazon, we have seen that from 2008 to 2021, it has grown over 10,000%. And this year, it has been up around 4.81%. This is largely due to the huge capex in AI investments. And since the company is using all of its free cash to invest in the development of AI, there's not been a lot of free room for profitability because the company is constantly investing or reinvesting the money it gets from multiple streams of revenue to developing more effective ways to use AI. But since the dip in the early April, when the tariffs happened, it has been up around 15 to 20%, which is better than the S&P 500 for the entire year. The only skepticism that analysts have of Amazon is that it's investing heavily, around over $125 billion in AI data centers to compete with Microsoft and Alphabet. But this move is believed to be positioning the company for future growth. And since the company maintains a large share of the online retail market, it is a sure 100% that the revenue it's going to get is only about to increase. Wall Street analysts think that the strong buy consensus is reasonable. And since it's projected to grow to around $295, $300, there's a potential upside of over 27% from the current price. This means that Amazon is surely a buy, and this is why I'm invested in this company. Let's move on to Duolingo. This sounds like a fun investing thesis because, well, it's Duolingo. You go there to learn the language and you go there to learn what you want to learn, and it's just an app. Well, it's a little different than just an app because Duolingo is a great company that generates a lot of income through a freemium model. That includes a subscription, a premium subscription, advertising. There's also a Duolingo English test and in-app purchases. And most of its revenue, approximately, well, I would say 80%, comes from the paid subscription tiers, Super Duolingo and Duolingo Max. Most of its income is from subscriptions, and which paid subscribers reaching around 11.5 million by the end of 2025. And since there is an ad-free option, Duolingo is converting a lot of free subscribers to paid subscribers. On the free tier, that doesn't mean that Duolingo is not earning any money. They have ads, and ads are displayed between lessons. So these ads accounts for around 9% of total revenue. The Duolingo English test is an online English proficiency certification, and it is aimed at international students and professionals. It costs $59 in the US, and it is accounted and accepted by a lot of universities. That is why it is a solid source of revenue compared to IELTS or TOEFL. In the third quarter of 2024, the revenue of Duolingo has reached $192.6 million. This is a 40% increase year over year. But let's look at one of the biggest things that account for Duolingo's authenticity and how it's projected to grow a lot during the next year. Premium subscriptions. The premium user base has seen significant growth, and it has reached around 10, 11, probably 12 million people by now. This proportion of paying users, the penetration rate, has grew from around 5% from the 2021 IPO, over 8% by late 2024 and early 2025. And this is driven by family plans, individual plans, and many other product improvements. There is a large user base for free accounts, and with monthly active users exceeding over 100 million. This is a huge pool for potential subscribers, and the conversion rate from free to paid users is growing year by year, quarter by quarter. And since this company adds around millions of users and converts them, as seen as the jump from 9.5 to 10.3 users in late 2024 and early 2025, this means that the company has a huge upside of converting free to paid users. I will state my bias in this company because I am a user of Duolingo myself, and I am subscribed to the family plan, which is very useful And most people think that Duolingo is only for learning languages. It also teaches chess. It also teaches music. It also even teaches most of the languages that the world needs, or the popular languages. For example, right now I am taking French and Japanese. I am also learning chess. And I am very excited to be on track to getting around 900 ELO in chess. And it's all thanks to the step-by-step gamified way of learning through Duolingo. This is my bias, and you can take my advice or my thesis with a grain of salt. But I feel like this is not just an app. It is a whole ecosystem that is built to create revenue. And since a lot of people are using Duolingo to learn multiple things at once, they will all come to learn on one single app instead of using, for example, chess.com for chess, or going to a tutor for math, or learning about or collecting a lot of textbooks for different languages. You can do all that on a single app. Let's look at the fundamentals of Duolingo. For Duolingo, there is a significant beat in the EPS for the third quarter of 2025. But there is one time that it missed the EPS, that is the fourth quarter of 2024. What does this mean? It means that the reported EPS for 2025 has drastically surprised and surpassed analyst consensus of around 0.72 to 0.76. But this is a surprise of over 680%. This means that the company is reflecting strong profitability and also substantial year-over-year growth. This is a strong top-line growth year-over-year, and more than quadrupling its revenue from 161.70 million in the 2020 year to 748 million in 2024. The growth rate has been consistently above 40%. The company unfortunately operated at a net loss leading up to 2023 because that was when the pandemic happened and not a lot of people were finding the motivation to learn stuff on an app. But in 2023, Duolingo turned the corner and achieved a positive net income of $16 million. This momentum accelerated in the year 2024 with the income jumping to $88 million. The operating income followed a similar trend, and it's becoming positive in 2024. And after several years of operating losses, indicating that there is an improvement in operational efficiency and scale. The analyst consensus for Duolingo is around a moderate buy to a buy. However, a lot of sources report a hold based on a lot of opinions regarding the uncertainty of growth as AI is taking over the need to learn languages and the need to learn different skills. However, my take on this is that people don't learn the languages to not use AI. AI is a great way to communicate quickly and effectively, but people are not leaving learning languages just to use AI. They are learning languages for a different reason. Right now, I am learning Japanese because I want to visit Japan one day. And I'm learning French because it has been very useful for my career. This is not because I will not learn any new languages because I can use AI. It's that for self-fulfillment or for my own personal gain. That is why even though analysts are skeptical about the growth of AI and the need to learn languages, I feel like this is a whole different equation. And since Duolingo is incorporating AI into its platform, this might even benefit Duolingo in creating more personalized learning plans and also more improved curriculums on its own app. So I see growth potential. And since the user growth and earnings growth has been significant for 2025, this will be a great company to invest in. And since that this year it started with around $325 per share, it has reported over a 40% year-to-date drop. It has reached a peak of around 540 around May of this year. This means that the stock has lost half its value since the beginning of 2025, but there is huge potential upside for this. And I'm not saying this because I use Duolingo, but this is very undervalued for a company that has seen growth throughout the years and consistently been growing in its user platform and its user account. So I think that for 2026, Duolingo will be growing as investors realize that the growth of this company is organic and it's not based on AI that is slowing the growth. It will use AI to accelerate its growth. Let's move on to the next company, which is Alphabet. And Alphabet is a company that most people know as Google. And this company, I believe almost the entire world knows what Google is. It has been a verb in our vocabulary. At this point, you go and Google something. Hey, can you Google that? Hey, let me Google this. So Google is a company that has a primary source of income of search. Very, very obvious. Google search has been the core engine and generating over 50% of its annual income. And there is also YouTube and its ads, Google Network, subscriptions to Google One, the cloud services, and other bets that Google is investing in, which is mostly AI infrastructure. Google search is the main fundamental income for Google. YouTube ads is growing strongly in both shorts and traditional in-stream ads, and it's around 10%, 13% of revenue. Google Network, even though has been declining over the years, this is a hyper-growth engine and it's driven by AI infrastructure, such as Gemini and workspace services. Subscriptions to Google includes hardware like Pixel phones, Nest devices, Chromecast, and a lot of digital content via Google Play and YouTube Premium. AI overviews in search and Gemini-powered tools have reached a peak of its growth and are major catalysts for engagement and monetization. This means that other bets are including the rest of AI and new experimental stuff, such as Waymo, the autonomous driving taxis that you see in your downtown. And it generates around $1.8 billion for 12 months, ending in September 2025. It is still operating at a loss, but this is a potential for a lot of income. The biggest source of income for Google remains advertising, and it's followed by YouTube ads and the Google Network. Even though Google Cloud is growing rapidly and a significant contributor alongside devices and subscriptions, for 12 months through September 2025, search ads alone brought in $215 billion, and it's a dominant revenue driver for Alphabet or Google. The advertising remains the foundation for Google's business, and it's diversifying with substantial contributions from its cloud and hardware subscription segments. These are all fueled by continuous investments in AI. And over the past few years, Google Search has consistently remained the dominant revenue source, while Google Cloud has been the fastest growing segments in terms of potential or percentage growth. And the overall trend shows that there is a lot of robust growth in total revenue, and it's driven by a diversified portfolio that still heavily relies on advertising. And as you can see throughout 2020 and 2024, the income from Google Search has been growing substantially. The income for Google Cloud, YouTube ads, and subscriptions are growing more steadily, but there is also growth. And the only thing that's declining is Google Network, because Google Network is still in the experimental stage, and it is still driven by AI, which is still being invested in and still being researched. In the future, this will be a source of revenue that is more significant. But for now, it is still declining because they have not figured out the efficiency or the experimental stage of Google Network. Speaking of YouTube, YouTube has been the biggest platform on TV and other streaming platforms with around 12.9% of streaming services. And this is beating Netflix by 8.3%, which means that YouTube holds the biggest piece of the pie when it comes to streaming services. And it's growing consistently upwards towards over the years, from $8 billion in 2017 to $36 billion in 2024. And based on this graph right here, which is the gauge by Nielsen, and it is a monthly report that tracks total US television consumption. And it's highlighted in 2025 that YouTube is the dominant force in this landscape. And since YouTube has market share leadership, a widening lead, and since it's beating Netflix by around 4 percentage points, and it's outstrips the entire Disney Media Group, which totals up to 9.4% in total watch time. It is the top media distributor, and also it has beat traditional media conglomerates like Disney, NBC, Universal, or Paramount. It has a huge moat in the market, and it has seen substantial growth. This means that it will continue to grow, and while maintaining its user base. So YouTube TV is a subscription that is categorized as linear streaming. Its viewership is counted towards the broadcast and cable categories rather than the general YouTube streaming share. So the 2025 growth is driven mostly by 18 to 24 year olds, and it has positioned itself as the primary replacement for traditional cable bundle. I personally don't have YouTube TV for myself, but what I could say is that if I am a new user to a TV, well, not a new user, but if I just bought a TV and I don't have any subscriptions, I would be incentivized to buy YouTube TV first because it has the NFL on there, it has movies on there, you can watch YouTube on there. That is almost everything I need for a broadcast service. Let's look at the company fundamentals of Alphabet. There is a significant growth in EPS over, the past decade. And from 2015, it was $1.18. Now it's over $8 in 2024. The major highlight was that in 2021, the EPS doubled from the previous year. And this has been growing ever since 2023, 2024, and then it has been going and is consistently beating the estimates. For example, for the third quarter in 2025, it was beat by a huge gap. This means that Google has been outperforming the market, and the income has been steady and certain. This is a revenue growth that is reflecting a consistent upward trajectory. It has always been going up, and there's been massive surges, and the revenue for Google has only been from single digits and now low double digits. It means that it is stable in growth after the 2021 surge. Analyst consensus rating have always been either strong buy or buy. And most analysts are recommending the stock because it has long-term growth prospects, and especially because its services in AI and cloud have been very consistent and very profitable. 80 to 90% of all analysts rate the stock a strong buy or a buy. And since this is the Class C shares, which is different from Class A, which is GOOGL, Class C is the non-administrative shares, which is you don't get a shareholder, you don't get a report as a person that is contributing to company decisions. You're just investing in the company. This translates to around 48 out of 50 total buy recommendations. a very small percentage of analysts suggest holding the stock, and very few to zero analysts recommend selling this. This means that Wall Street is very confident about the stock's future performance. The stock is currently trading at around $313, and the market capitalization is over $3.78 trillion. This means that Google's investments are paying off, and artificial intelligence and Gemini models are now seen as key growth catalysts, and it's boosting engagement in search and the cloud division. When you go on Google to search for things, you now see the little AI mode. This means that it has compiled all the data that you need and put it in a small box that you can read and understand the graphs of what you were searching for. This has been a huge player in getting people to use the AI mode more, and this has integrated into the Google search that everybody is using. Wall Street analysts, I think, are maintaining a highly positive outlook on Alphabet, and since it's a strong buy, a lot of analysts are issuing buys and a lot of investors are buying into this company. And you can tell by the 60% year-to-date growth for Alphabet. Thank you so much for watching this episode. Upcoming, I will be going over my thesis for Meta, NVIDIA, Palantir, and Shopify. As you can tell, I am investing in a lot of digital AI companies. And since these companies, I believe that they have potential upside and will grow way more than the S&P 500 in the next 2026 year. Be sure to subscribe and make sure to discuss or comment whatever you want in the comments. Let me know if my thesis is reasonable or not reasonable. And I look forward to reading that from you guys. Thank you, and I'll see you in the next video.